The real estate sector in Nigeria is experiencing phenomenal changes. At the 2014 Africonomie Summit, panelists discussed the new direction and strategies in real estate investing.
Okay, all right, so we're going to talk about the new direction and strategies in real estate investing. So maybe we'll start with you, Tosin. You're a legal fellow, and so tell us from the legal perspective. I know that detailed solicitors have been very active in terms of real estate. As a lawyer as well, I know that you see most of the lawyers, yes, we do deals, but you have been very, very active. So tell us, from your own perspective, what's the trends going on right now?
I think I'll just start from a little story on how we started our own journey in the real estate sector, and I'll say that sometime at about I think 2008, we looked at the market, the real estate market, and the roles that lawyers were playing in deepening the sector, and we felt that there was much more that people were doing globally, in the sector, and the Nigerian real estate market was at subpar compared to what was happening in other jurisdictions. And we just sat down and said, okay, how can we support the sector? A lot of lawyers were known to do brokerage alone. Thank God we have people like Broll now who are like leading the market in terms of brokerage and all of that. But that was the major role that lawyers were playing. They were not doing transactions, they were not structuring deals, they were not advising. And then we sat down and said, okay, there must be something definitely wrong. This sector is one of the most robust in other jurisdictions. Our own real estate sector was contributing very little, to the GDP and all of that. And basically what people were doing was only getting bank finance to build houses, and trying to find people to take up those houses, and that was it. Nobody was leveraging the industry. We did not have a real estate capital market. We didn't have anything. In 2008, we had the first equity REIT that was floated, I believe. I think 2006 or 8 or about that time, and that just, created a buzz in the industry, and people were looking. The greatest challenge that we have in this sector, apart from the fact that, the supply side has stayed at a very, not competitive and not even, people that play on the supply side just want to stay at a certain level that alarms me. We have a 17 million housing deficit, or much more, depending on what side of the divide you sit on, but between 17 million to 20 million of a need that is the most basic in most other countries. And we have people playing in the supply sector that cannot even fit the need. And go to the financiers. What were they doing? The only thing they were doing was providing bank intermediation services to the people in the supply side, and it was a mismatch.
I mean, it's easy to point the fingers at financial institutions like banks, but I think there's also been a dearth of equity capital, and in the last few years we've seen increasing interest from institutional funds, from real estate funds, listed and unlisted funds, both offshore and local. Some of these activities has led to increasing stock of retail assets that we see. The first one being the farms in about 2005, and then that's followed on with the Yinka Mall.
We have the Ogudu Mall in the pipeline. We have so many malls, and also going outside Lagos, we have the Ibadan Mall, the Palms Ibadan, which is almost going to be open soon. We have the Adeleye Mall in Kano, which is just opened. That's the largest mall to date in Nigeria, 26,000 square meters of space, which has just opened in Kano. Despite the security issues, the Kano demographics has enhanced the development of this mall. It's quite a nice mall, and it's the largest so far. And then we have other malls in the pipeline. We have Kwara Mall, we have that's already open. We have the Polo Park Mall in Enugu. So these malls are springing up and they are growing. And the main reasons why these malls, this retail market is striving, I would say, is the fact that we have kind of an emergence of high disposable income, the middle class with high incomes coming in. And we have urbanization as well, springing up as well. And then with the latest rebasing of Nigeria's GDP, which has increased over the years, and they've said that Nigeria is the largest economy in Africa now.
What is happening now in Nigeria is that, especially from institutional investors, there's a lot of interest in Nigeria, and they're looking for, yet again, A-grade assets to purchase because of the nature of their funds. They need something sustainable that gives them constant income. And what we've witnessed before now is, well, you find wealthy individuals, corporations who own these assets and then hold on to them. They don't want to sell either whole, or they don't want to sell any equity in it. But with the increasing interest, these people have the funds to buy in. But because of the nature of their funds, they will not take development risk. They will not take development risk. So I would say personally, from my point of view and Broll's point of view, I'm on an active campaign to speak to anybody that owns something close to an A-grade asset that will you sell. Because that's the only way we can increase the stock. People probably sit here and overpay for the quality of offices they sit in, and the only way we can improve on that is by increasing the supply of prime grade offices. So if you pay top dollar, then I believe you should be in a good office. So on one side, we have the local developers, and a few international developers that come into the market and know how to work getting the approvals, the title perfections, and build these assets. Some of them hold, some of them exit. But then the real question is to the local developers who know their ways around, who I think the trend should be for them developing these assets as quickly as possible, because there's a long list of people waiting to take it off them at very good exit yields. And then they make money. If you like development, you're willing to take the risk, and it's very profitable. I've tried to do back of napkin analysis on a prime grade asset I know is going to come to the market later this year, and probably maximum investment into it is maybe $30-35 million, and they could get out at double. It's staggering, but the people who have the money and will take them out will not put that money into that development. So the trend right now we see is a lot of people come into the market, they want to get their hands on this prime grade assets, but they will not take the development risk. So for the people who hold on to these assets, they don't get the best out of it, So it's for them to think about either divesting and moving on. And because some of these investors cannot also find these assets, they are also now willing to maybe come in if they find good offtake profiles and things like that. Moving away from what they typically do and willing to take more risk in coming in at an early stage. But there's definitely a major opportunity to take advantage of the amount of funds that are coming in this direction for the office space. And I foresee, maybe a decade down the line, we see that the landscape has changed. People are in proper offices with good structures and it's sustainable. And the very significant part of that is because of where these sort of investors are coming from. They're coming from a place that is largely a tenant market. As to the landlord's market here, where someone says it's 5 years rental, it's 10% agency, 10% legal fees, take it or leave it. It kills your business. I feel for some people, and when I see the cost of occupation in Nigeria, you're about to come into a country, you don't know how your business is going to go, and you need to sign a 5-year lease. You need to cut these huge checks without earning your first dime. But for the institutional investors, I see some faces I know here, they're willing for you to sign a 5-year lease and pay them per quarter. It would definitely refine the market, gives the investors more confidence, helps the occupiers as well, and overall we end up with a more sophisticated and proper market.
With the rebasing of the economy and the emergence of a vibrant middle class, the real estate sector presents enormous opportunities.